Let's talk about volatility indexes and implied volatility. That's something a lot of people don't understand, but it's such an important marker in traditional financial markets and on Wall Street. And I was wondering, how do you try to explain to people what implied volatility is? Because, like you said, it really kind of tracks the fear in the market, which is something everybody wants to know. And it's something that is, in crypto, there's a lot of fear and a lot of greed. So how do you start having that conversation to explain to people what it is and why they need to be watching it?
So the BVIV index, and we have a number of other indices around the BVIV index, the entire term structure, but the core BVIV index is a 30-day implied volatility index, very analogous to the VIX index in the U.S. equity market. And so, BVIV basically uses order book options data to price this, 30-day implied vol index. It's looking out 30 days and giving you an expectation of how volatile the market is going to be over the next 30 days. And so the BVIV index is effectively how much the market is going to move. You can get the implied, standard deviation move from this implied move over the next day or 7 days or 30 days from our different indices. And so basically, when the market is very fearful, the BVIV index tends to always spike. So it's a very good tool for diversification and hedging the products that are linked to it. Also a very powerful indicator, that's tracked on TradingView, CoinMarketCap, and The Block, and others. And so really it's this look into the future of the crypto market, the future price movements and expected volatility. And so the VIX index has earned its nickname, the fear index in the U.S. equity market. The BVIV index has a very similar property. Although crypto vol is a little bit different, when the market is also bullish, it can also see positive spot vol correlation. So very negatively correlated in times of fear, but also potentially positively correlated in times of greed. And so crypto market's moving around a lot, or the market is expected to move around a lot, the BVIV index tends to increase.
Interesting. And number-wise, what's the kind of range that it's usually in, the BVIV? Is it kind of like, I guess, is it floored at 0? Does it go up to like 120? And how does that compare with, say, an equity index, volatility-wise?
Yeah, so BVIV's currently about 50. It actually made a low from the last, since July of 2024 is a recent low. But, in the recent market movements where, a couple months back, the market saw some bearish price action, BVIV, spiked to 80 or so. And so I believe in the FTX crash was around the time we first started publishing this new methodology, it spiked to, I think, 120 or so. And so in times of fear, you might see it, above 80 or even 100. And then, it has a very persistent mean reversion tendency, right? So when the market is calming down after these big moves, you can see it come back to sort of some long-term, medium-term, short-term mean. And so it is a very great indicator for understanding, expected vol in the market. But it's, you can think it's, unless crypto market blows up and goes to zero and just disappears entirely, it can never really go to zero. It's kind of always going to mean revert to some sort of mean. And so it's a very unique asset. It's different from, Bitcoin itself or Ethereum or Solana. It has some different properties.
Peter Thiel took $500,000 and turned it into $1 billion using the exact same techniques we're using inside the investment club. He met a CEO, his name was Zuckerberg. He pitched him the deal and he said, okay, I'll give you $500,000. Mark went public and sold the shares to people like you. Well, what happened to Peter? Well, he exited and got a 2,300x return. The wealthy invest in early stage companies, folks. The public markets are for suckers. It's a rigged game. By the way, this happens in crypto as well. It's called pre-sale tokens. This is Solana. Does anybody know this chain? They sold pre-sale tokens for 4 cents. And you can see the date on there, April 5th, 2018. Look at Solana today, folks. That thing's up over 1,000x. The media and Wall Street and all these hype people get you to buy the top. Meanwhile, they put their clients in at the bottom and they use you for liquidity to make their clients rich. You can play this same game. You just have to have the financial education and the deal flow. That's it.
That's very cool. And the VIX index, when you're looking at just equities, that's significantly lower, right? What kind of numbers are usually on that?
So the VIX, is typically around, it seems to be 15, 20, in times of, macro uncertainty with tariff uncertainty, things like that. It's gotten up to, 25, 30, even 50 in the last month or so, which is, one of the biggest moves in the VIX history. And so you can think of the crypto market as juxtaposing BVIV and VIX is substantially more volatile, right? So BVIV's at 50, 60, 70, VIX is at 20. You can say it's multiples more volatile. And we also have the EVIV index, which is the Ethereum 30-day implied vol index. The EVIV index is, there's a pretty large delta between the BVIV and EVIV index. So BVIV 50 right now, I believe EVIV is at 75, 70. Okay. And so EVIV Ethereum is substantially more volatile than Bitcoin. And then we actually have a Solana 14-day implied vol index that is currently around, I think, 100. And so we do have a bunch of other indices in the BVIV, EVIV, SVIV family. We have a BVIV 1 day, just like there's a BVIV, a VIX 1 day index. And so there's a lot of stuff you can do with our indices, and we've been finding a lot of product market fit. A lot of traders, investors across the retail, institutional segments of the market are very interested in using the product.
And so, so with the volatility index, you're not betting on whether it's going to go up or down. You're basically buying it because you think the volatility is going to increase.
Yes, I mean, if you're using the derivatives that are linked to BVIV, you think that there's going to be a big move in the market. Maybe you think that the market's uncertain with tariff uncertainty, something like this. BVIV might go from 50 to 80. And so the BVIV linked derivatives can be used to hedge the next couple weeks or next couple days of price action. And so, if you're using it for speculation, that's for hedging. That may be how you're using it. You can also use it in a speculative way with various strategies. If it sees a big move up, there's going to be some sort of mean reversion. You could play the mean reversion. Maybe it goes back to the 50 after the 80 move. And so it's a very versatile product. It can be used as an indicator. It can be used for diversifying and hedging. It can also be used for speculation and various strategies. And so very unique product with very unique tendencies that are not found in normal spot crypto assets.
I think your last point is really important for people to understand because I started on Wall Street in 1993 and I was trading a fixed income book, a derivatives book. It was a swap book. And all I looked at all day was government bonds, yields, and these LIBOR curve yields. But we would watch the VIX, which was wild because the VIX was telling about the volatility of the stock market, which had nothing really to do with what we were doing, but we always kept our eye on it because it was always telling us kind of what the global market was doing and how that ultimately might affect even fixed income. And so it's really an incredible metric. It's a unique metric because we really didn't have options priced on exchanges and probably until the late 70s, 80s, and then implied volatility. It's a fairly newish concept, I would say, in financial markets, but really, really powerful. And like you said, it does so many different things. I actually didn't know it was part of the Fear and Greed Index, and that's wild.
For CoinMarketCap, it is. It's one of the aspects of it.
Interesting.
I guess the Fear and Greed Index is something that's been kind of popularized in the crypto market. Yeah. There's kind of a legacy version, and we've actually helped CoinMarketCap develop this their version of it, which uses BVIV, which is, we think, a great aspect to be creating something like this.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.